PayPal. We are talking about PayPal stock in this video here today, folks. I wanted to react to this article here. I was reading through this a few nights ago, and I wanted to read this with you guys and kind of react to this and share my opinion out there. As you know, I'm buying PayPal stock very heavily right now. Very heavily. And I don't plan to stop anytime soon. And I thought this article was very, very good. And so I want to share some of the highlights of it here with you guys here today. So I hope you enjoy that. I appreciate you all joining me as always. Thanks for being subscribed. But before we get into that, I want to get something off my chest, okay? So I've been getting a little bit into Twitter over the last, I would say, 6 to 12 months. And, you know, I kind of like Twitter, but I also don't like Twitter. And the reason I don't like Twitter is because it is very annoying. People like to tweet out a lot of stuff that doesn't have very much context. They like to tweet out things that aren't very educated. And it gets people going, and it gets a lot of retweets, and it gets a lot of people to like it because a lot of people aren't educated on what's actually going on and what's going on in the economy. And so this is a really good example I want to show you guys here today, okay? This person, they're pretty good at doing this type of stuff. They say, good morning, everybody. S&P 500 is up 15% year to date, and the volatility index is below Rona levels. This is happening during the fastest interest rate hike cycle and the highest inflation in 40 plus years. I've never seen such a resilient market. You new to the stock market? Did you just get in the market the last year, maybe? The last 2 years? Are you brand new to this game? Because I can tell you, this is not even close to being the most resilient market I've ever seen. Not even remotely close. And I've been in this game for 15 years, okay? First thing is, highest inflation, blah, 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 Fed raising rates like crazy. Oh, you're talking about the past. Okay, we can talk about the past. This is what's going on as of right now. Inflation is becoming much less of an issue by the day. If you want to talk about a year ago, that's a whole different story. No, the Fed, are they raising rates anymore? No, the Fed stopped raising rates. They're talking about, oh yeah, I might do it in the future. Sure, they might do it in the future if inflation goes crazy again, okay? So what in the world are you talking about, lady? Clueless, absolutely clueless. Never seen such a resilient market. I'll show you two markets that were far more resilient than this, okay? One is the market that basically I got started in, okay? I got started in the market end of 08 into 09. That was the most resilient market. I mean, absolutely incredible. In a matter of 9 months span coming off the lows of 2009, that actually it was even a bigger percent of this. It's just what TradingView shows here. It was about an 80% gain in 9 months in the NASDAQ. About 80% in 9 months. It was actually a much bigger number than that because this doesn't get it actually at the lows. The NASDAQ was far lower than this. I think the NASDAQ bottomed at, it was either 1,000 or 1,100 or something like that during that time frame. But nonetheless, folks, basically the NASDAQ about doubled up there in a 9-month span during the worst economy we've seen probably since the Great Depression, or certainly in many, many decades. It was absolute complete dumpster fire, and things were getting actually worse in 2009, much worse. Many more banks were failing, and many more banks failed in 2010 as well. And so banks are failing all over the place. Everybody's losing their jobs, complete disaster, and the NASDAQ just went on one of the biggest bull runs you've ever seen in the history of the NASDAQ. That's what you call a real resilient market, okay? You want me to show you another resilient market? This was the most resilient market I've ever seen, and arguably the most resilient market we've ever seen in history, okay? This was in 2020, right? In 2020, the NASDAQ almost doubled in a 9-month span during the most uncertain period we've seen since WW2, okay? There's nothing you could put on par with that. I don't even know if you could put WW2 on in terms of that, because in this whole situation, people are so uncertain. They're like, is the economy going to be closed for 3 years? You know, nothing's going to be the same. We had unemployment going to the highest levels, you know, we had certainly seen since probably the 70s, early 80s and 70s. I mean, just ridiculous, absolutely ridiculous. And so, there the NASDAQ was. It almost doubled in 9 months. So, yeah, we have seen much more resilient markets than this, folks. Don't be fooled by uneducated tweets out there. Do a little research and you'll find, oh no, this is nothing as nearly as crazy as it looks. But you know, stuff like that gets a lot of retweets and it gets a lot of hearts and people saying, oh my gosh, yeah, that does sound crazy. Get a little educated and you realize, oh, it's not that crazy at all. Appreciate everybody joining me as always. Thanks for being subscribed, folks, to the channel. New all-time high subscribers all the dang time. And we actually talk a little educated rather than these folks that get all these dang followers by just spewing complete nonsense out there. PayPal. Don't fear Apple Pay and Stripe. PayPal's fundamentals remain strong despite competition from Apple Pay, Google Pay, and Stripe as it continues to grow in transaction volume, customer numbers, and profits. The company's dominant market share is due to its long-standing trust, ease of use, and compatibility with all devices and operating platforms, with a potential upside 18.63% over the next 10 years. Initial rate of return, PayPal is considered a strong buy despite temporary headwinds and competitive threats. Investment thesis. Let's face it has been a difficult year for PayPal, to say the least. Despite a strong start to the year, it's currently down about 11.5% year to date. This is when the article came out, right? Compared to the S&P 500, which is up over 10%. This is once again as they were writing the article, which was a few weeks ago. Therefore, we will address the reasons why investors may be too bearish on PayPal, overestimating competitive threats and overstating temporary headwinds, while the company is fully focused on returning capital to shareholders and maximizing PayPal's efficiency. We will quantify these risks, outline the extreme downside scenarios might look like, and why we think the stock could generate investors more than an 18% rate of return per year over the next 10 years. Quantifying headwinds. Since competition is top of mind when it comes to investors thinking about investing in PayPal, especially with the growth of Apple Pay, we must discuss our take on the market and why the market's too bearish on the company. That said, we are currently note that other payment gateways such as Stripe, Shop Pay, Google Pay, and Apple Pay are the main perceived threats to PayPal's business model. First, it is important to note that these payment methods or alternatives have not just been around since last year. Either. Shopify Payments has been around since 2013. Google Pay has been around more than 5 years. Apple Pay since 2014. It's coming up on its 10-year birthday. And yet, despite growth of payment providers, PayPal has continued to grow in transaction volume and customer numbers and profits, right? And this is just goes to show you kind of the growth of PayPal over time. Absolutely magnificent. Look at the CAGR here, the 5-year CAGR. 14% active accounts, 24% total payment volume, net revenue 16%, non-GAAP EPS 17%, free cash flow 22%. I mean, the numbers are just incredible. In 2022, PayPal alone processed a staggering total payment volume of $1.36 trillion, rivaling the largest credit card providers such as MasterCard and Visa, which have been around since the 1960s, and Amex, which was founded in the 1800s. Okay, what? On an annual basis, PayPal processed $1.42 trillion in volume in the first quarter, and it is likely that this will continue even without user growth, and PayPal, the companies they represent, are able to pass on the cost of inflation over time. A company in the payments industry that is still processing $1.42 trillion in volume and is also growing does not sound like a company on the verge of bankruptcy in our eyes. Apple Pay is reportedly already processing more than $6 trillion in transactions per year. Gotta love the App Store, eh? Far outpacing PayPal and even MasterCard and Amex. We ask ourselves, why is it that PayPal's fundamentals have remained robust while other players like Apple Pay have recently captured a huge market share? So this kind of shows you, this was in 2021, where different companies were at. Obviously, Visa there, Apple Pay, Alipay, which is it's very confusing. It used to be owned by Ant Financial. Ant Financial used to be owned by Alibaba. I don't know what the situation is now. China, they're always doing all types of different stuff. You got MasterCard, you got Google Pay, you got Amex, you got PayPal there, okay? Amazon Pay, Samsung Pay. We think PayPal's dominant market share is mostly due to the fact that people have trusted PayPal for more than 20 years and still find it the easiest, fastest, most versatile way to transfer money and make online purchases. Some will point to Apple Pay as a direct competitor to PayPal, but there are certainly differences between the two. First, Apple Pay operates within the Apple ecosystem, which is a great way for Apple to protect its moat and provide more value to users in the Apple ecosystem. However, in the fourth quarter of 2022, Apple's global smartphone market share was about 24%. Despite Apple Pay being a great service, retailers offering Apple Pay only target the population of people that have Apple products, which obviously, if on a worldwide scale, is a pretty small amount, relative to how many people don't have it. Honestly, there's a massive amount of Apple users that don't even use Apple Pay as well, so it's something to keep in mind. Unlike PayPal, which it's crazy. I remember how many people I've been like, hey, you want me to Apple Pay you? And this is people with iPhones, and I don't even know what that is. Can we PayPal? Can we Venmo? It's fascinating. Unlike PayPal, which works on all devices and operating systems, merchants using Apple Pay also still have to pay the overheads that they have to pay to credit card card operators such as Amex and Visa. We see Apple Pay as more of a competitor to Venmo, especially replacing cash bank transfers between individuals. Venmo currently accounts for 18% of PayPal's revenue. Unless everyone switches to Apple Pay isn't just a universal payment method like PayPal is, right? And I think that's a phenomenal point. Phenomenal point. This space is highly competitive, but damn it, every space is highly competitive. E-commerce is extremely competitive, right? And at the end of the day, Amazon competes with Walmart, and Walmart competes with Target, and all these guys compete with all these guys, okay? And they all directly compete, indirectly compete. These markets are absolutely massive. I mean, we're talking about, payment processors, when we're talking about all these transactions being run. I mean, it's incredible how big these markets are. As we see it, customers will continue to use PayPal because it has always been a trusted payment method. Just as Amex, Visa, and MasterCard are dominant, PayPal gets its advantage from being a payment processor that has been around the longest and the largest network with the most businesses and customers using it. In other words, we do not believe that consumers already have a meaningful reason to stop using the service, nor does it seem likely that it will happen anytime soon in the future. If there were any margin pressure at all, we believe it would come from the merchant side and not from the consumer side. However, we believe that margins will remain intact as long as merchants achieve significantly more conversions when they accept PayPal than without using it. As it stands now, as shown in the statistics above, merchants who use PayPal typically see 33% increase in completed checkouts compared to other card providers. PayPal also provides 20% more repeat buyers, and customers are more likely to buy because it only takes a few clicks, 100%. Even in the unlikely event that another excellent payment provider in revolutionary technology comes up to challenge PayPal, we think it may take quite a while for PayPal customers to switch, adapt, and use something else, especially in the older cohort of PayPal users that have sworn by its security and ease of use. 100%. That's a tough thing. It's like, even if you have other options out there, it doesn't mean other people are going to use the other options. It's just like, such an important factor because you're going to have, in any market, you're going to have a lot of different companies competing. And, there's always like a worry about like, well, what if people switch from this thing to this other thing over here because this is the new hot thing or the new potential competitive threat. People have to, the new product has to be far superior for people to want to switch to that. It's like, why do people continue to use Facebook and Instagram? Well, the reason is like those have competitive moats around them because they're great products and they are ultimately, the ones that have everybody on them. So there's a million different social media networks out there, but hardly any of them have any success because they can't reach that critical mass, that critical scale. And it's something so revolutionary has to come along that has to be so much better to take people's attention away, right? Which is very, very difficult. Snapchat tried to challenge that, obviously. TikTok tried to challenge that. And so when it comes to something like PayPal, Venmo, Braintree, which is also owned by them, you have to have something that comes along and is just so vastly superior to everything they have going on that and you just don't have that in the market. Apple Pay is not that. Nothing is that. Nothing is. You have other alternatives to PayPal, Venmo, and Braintree. You have other competitors, but you don't have anybody that has a better overall service than what they offer. And so until something comes along that's so much vastly superior, people aren't going to switch, right? Competitors can maybe limit your growth a little bit, but it's hard to get customers away unless it's that amazing. In a sense, we see PayPal in the same way we see email providers such as Gmail, which is the largest email provider in the world. Why do users use Gmail? The answer probably lies in the fact that it is most widely used, safe, and secure email provider, which is free of charge. Are there better alternatives to Gmail? Perhaps there are. But what would the motivation be to change email providers? Great point. After all, most people who use Gmail can use it for free, and switching providers would be a huge headache. Not to mention the need to change all the services contracts still linked to your old email provider. With PayPal, it is similar, as people usually have multiple subscriptions like Netflix, Uber Eats, Lime, Bird, Scooter attached to an account that are automatically charged every month or when you use the service. PayPal has also recently begun to solidify its moat by now accepting Apple Pay as part of its complete payment solutions. Small businesses can now accept payments such as Apple Pay, MasterCard, Visa, and others while still processing through PayPal, protecting their dominance against Stripe, Android, and Apple Pay, right? And I think they're referencing a little more on the Braintree side, because Braintree has it where, if you're an online website through Braintree, which is owned by PayPal, you can have your checkout where it offers PayPal, Venmo, Visa, MasterCard, Amex, Apple Pay, Google Pay. I think that's all of them, all in one place, which is phenomenal because that almost gives you pretty much everything anybody would want to use to pay with right there, all in one spot. And that is something that's pretty sick technology, and that's something I think should be on every single e-commerce website within the next 5 years. Because at the end of the day, like, people want to pay with whatever they want to pay with. If it's somebody who wants to pay with Apple Pay, they want to pay with Apple Pay. You better have that option there, or you will miss business. If somebody wants to pay with PayPal, you better have that option there, or you will miss business. And it's been proven over time that if you have a PayPal option, you will make a lot more money with your e-commerce website. That's just a bottom line with that, right? And so I think that's another huge moat they have. Lockdown, not up. From a fundamental perspective, we're always looking for companies with a lot of downside protection and a margin of safety. The saying, lockdown, not up, still applies if you ask us. So we look at where PayPal might bottom out and what the worst case scenario would look like. Looking across the board at other major tech giants over the past 10 years and their free cash flow over time, a few companies stand out. Apple, Meta, Microsoft all saw their free cash flow yield skyrocket during times of worry. Yeah, and so they obviously have a chart here that kind of shows that over time. I mean, this part of the article to me was not a big deal. It's not surprising. I mean, if the bottom line is if a stock goes down in an epic way, right, all that's going to look way out of whack. P ratio is going to look way out of whack and things like that. Like, to me, I don't know. I was like, I don't see where they're really going with this. Obviously, if you want to pause the video here, read more through this part, you can read more through this part. And, I just didn't see it as like an extra, like, this is a bullish lever for PayPal in my opinion, okay? An updated valuation. Taking into account all the recent information from the above, we have also adjusted our valuation model to reflect these changes. In terms of revenue, PayPal has a few more years of high single-digit growth to go, which we think the growth will level out to inflation levels over time. We think EBITDA margins will remain more or less in line with historical averages, with a very slight increase due to cost savings, reductions in R&D, research and development, due to reaching maturity and other positive developments mentioned in the last earnings call. One of these could be AI, which could help PayPal optimize loss prevention, fraud prevention, that's a good point, and automate more tasks such as customer service, good point. At 16 times EBITDA, we consider PayPal potentially worth north of $141.72 they have here. And so they have their forecast over time, revenue over time. Let me see if I can click on this to bring this in here a little bigger. There we go. Okay, so check this out. So the revenue this year of about just under $30 billion, and they have a revenue growth going all the way down to 1.8% in 2032. That's a little extreme. I think PayPal will grow stronger than what folks have for numbers here, in my personal opinion. I'm expecting, pretty consistently about, I would say, anywhere from 7.5% to about 11.5% growth a year for basically at least the next 5 years, in my personal opinion. Right? Some years will be a little better growth if the economy is a little stronger, and some years will be a little weaker. So they have the company in 2027 doing just under $40 billion of revenue here. Let's see here. They have their market cap, $162 billion. Right there, share price 2032 of about $141. As of this article, the share price was $63, obviously, right there, right? So 122% upside in this sort of scenario. And I think that scenario is very, very, very conservative. I mean, extremely conservative. My opinion is PayPal will be $141 in the next 18 months. My opinion, okay? The company's so significantly undervalued right now, and based upon the growth I have them doing, I think the stock will be $141 within 18 months, outside of some sort of a stock market crash or something insane like that. On a free cash flow basis, most remains unchanged. Expected to $4.87 this year, $8.55 over the next 10 years they have, right? The bottom line, we think PayPal is in the same scanning scenario as Meta about a year ago. And that's definitely, I have said this a lot recently, like PayPal's the easiest money I've seen in the market since Meta last year in the fourth quarter of the year. Fourth quarter of 2022 was just an incredible opportunity by Meta. You were just stealing money. And in my opinion, PayPal is that sort of opportunity right now. With the market blinded by temporary headwinds such as a fear of competition and slower growth in revenue, we also think Google Pay, Apple Pay, Stripe, and other competitors that have been around for a while are not as big of a threat as investors may think. Although competitive threats to PayPal have arguably increased, the company is still able to maintain stunning EBITDA margins, demonstrating their strong value proposition. We believe PayPal's values still stand because the company is too deeply entrenched in the payment provider industry from both a consumer and merchant perspective, 100%. As we see it, it may be a long time before merchants and customers stop using PayPal or taper out its use. Thus, we expect the maximum downside for the company to be about 30% to around $45 a share. I hope that happens. As somebody that wants to buy PayPal for at least the next 6 months, if not 12 months, that would be best case scenario for me in the short term. At a free cash flow yield of 10%, although we think this would be an extremely unlikely scenario. From a technical perspective as well, PayPal should have tremendous support at the $45 level. Good luck getting there. I hope it goes there, but I think it's much more likely to explode to the upside over the next 6 months and go down to $45. That's just my opinion. On the upside, we think PayPal could yield an IRR of about 18.63%, well above the historical market average, making the company a strong buy overall. And I think their case is very conservative. I mean, extremely conservative. I think they're actually far too conservative, in my personal opinion, in regards to PayPal. I think PayPal is going back to all-time highs over the next 3 to 5 years, which is $300+ a share. So I personally believe. I believe the company is so significantly undervalued. I believe when they announce the new CEO, CFO, the direction this company moves, I think they're going to be in a great position to have some extraordinary upside over the next few years. That's my opinion on it. So appreciate you guys joining me as always. Thanks so much, folks. And by the way, PayPal's PE likely should end up being in a 30 range long term, which is kind of in standard with companies like MasterCard and Visa. If you want to check out the pinned comment down there, I got something for you guys. Investing in 2023 and beyond, a bunch of tips for you guys. If you make under $100,000 a year, I got a video for you. And if you make over $100,000 a year, I got a video for you that will be pinned comment down there for access to that. Much love and have a great day.